for that awesome introduction. Like I said, I am ready to jump in. I hope you guys are ready and that you are finding our community financial education forums very beneficial. So you still have time before we dive into this topic to reach out to your loved one, anyone who's been asking you questions and questioning why are you attending those financial forums every Tuesday night. Tell them they definitely want to tune in and get a closer look at a cash value life insurance policy. And so when we're looking at understanding cash value life insurance, it just really opens up the door to so many different avenues on how you can use life insurance. Like business director Kimberly Williams said, that I am an educator. I've been an educator for 20 plus years, but when you are an educator, people look at you like you should know everything. Well, guess what? I didn't know how money works, and I definitely didn't understand insurance. And that's the reason why I joined community builders like business director Kimberly Williams and the rest of the OIC 10K leadership, who is just dedicated to putting this information out to our community so that we can empower ourselves and build wealth. And so, as we're wrapping up the month of September, which you guys know is life insurance awareness, we want to make sure that you guys understand the values and the benefits of life insurance. It goes deeper than just a death benefit. And so, to make sure that we all are clear, I'm going to start with just defining what cash value life insurance means. Because most people who look at life insurance in a traditional sense, oh, it's just there and I can only benefit from it when I die. So they look at it as another bill, but it's so much more to life insurance. So a cash value life insurance is any permanent life insurance policy. That's not a term. And it combines a death benefit with a cash value account that grows over time. And so you pay your premiums, and part of your premiums cover the cost of your insurance, and the other part, which accumulates as cash value, you can access later. So this is another living benefit of life insurance that proves the title really means what it says. Life insurance. It covers life while you're living. Now, with insurance, there are two main types. You have your term. Last week, business director Eduardo Sprague did an excellent job explaining the term insurance. So make sure that you go back on our YouTube channel, or if you're part of our public Facebook at OIC 10K Totally Lit, you can go back and view that video in details. But tonight we're focusing on cash value, but we want to make sure for those who are tuning in tonight for the first time, you have that basic understanding. So, life insurance comes in two main types. You have a term life. This is a pure protection for a set period of time, and it's temporary, and it may last for 10 years, even up to 30 years. You set that time with your financial professional, an insurance agent that sits with you and wants to know what's your goals, what are your needs, and how they can add value to help you along in life. Now, the other type, which we're focusing on tonight, is a cash value life in policy. This is protection plus a savings component. So this is the living benefit, one of the living benefits of a cash value life. And these policies are permanent. So keep in mind, both provides financial protection. One is term life, which is temporary, and the other one has the protection and the savings component, and that's the cash value. In a nutshell, with term life allows you to grow into your goals, where you have a lower initial cost. Although there is no savings, it has the temporary coverage to protect your income, to protect your goals while you're in between states. But keep in mind, it expires after a set period. Now, there are carriers that offer a conversion where they will allow you to convert your term to a permanent policy. So if you have a temporary policy now, you definitely want to get in touch with your financial professional. You know, we're here at OIC 10K, and we also offer policy reviews. You're able to get in touch with us through our channel or our Facebook, and then also our website at www.oic10k.com. And we will be happy to look over that policy with you. So, and the cash value, although it may be at a higher cost, but it aligns with your saving goals because it has that saving, that living benefit component, and it's a lifetime coverage. So covers you throughout the life. So it's a higher initial cost and it builds savings over time. It's permanent and the coverage lasts a lifetime. And since life is unpredictable, you definitely want to make sure that you have what you need as you are progressing through life in accomplishing your life goals. So, as I said tonight, we're focusing on the permanent side of life insurance, those cash value life insurance. So, like we have two main types, the temporary and the cash value, which is a permanent. There are four different types, main types of permanent life insurance. You have a whole life policy that has a fixed premium, and you pay for the guaranteed cash value growth in a whole life policy. And guaranteed, that means if everything is going south, the carrier guarantees that you will earn a certain interest amount on your money. And we'll take a deeper look into what it looks like growing our money in a fixed environment. And so the next type of cash value life insurance permanent policy is a universal life. This has a flexible premium and a death benefit. The cash value earns interest based on a credited rate, some guarantees, but there are variables that you must make sure that you understand as you're working with your financial professional, your insurance agent. And the third type of cash value permanent life insurance is the index universal life. This is credited interest that's linked to an index like the S&P 500. But with this, you have a floor and a ceiling. And so you have the growth with zero risk of loss, but your ceiling make it may be lower than what the market gain may be at that time, but you have the security when the market takes a correction. You are not, your principal is not at risk at loss, and either even your previous gains for that time period you don't risk in an index universal life. And the fourth type of cash value life insurance is a variable life. This cash value is invested in a sub account, and you have the opportunity to grow money in mutual funds, and the growth is market dependent, but it's not guaranteed. So if you are someone who can stomach high risk, then that would be a policy that you want to consider, but definitely make sure that you do your research. But all of these are cash value life insurance. And remember that permanent coverage combines a death benefit and then the cash value saving growth as well. And so when we look at, well, how does the cash value grow? Well, we all have three environments we can grow our money. And if you look at the picture that says options for your money, when you are looking to grow your money, that line represents the growth of your money. So just looking at that picture, what line would you like your money to grow? In what direction? I know a lot of you guys may say, I like that line that looks like a staircase. Well, that staircase is an index environment, and the cash value life policy that grows the cash in your policy is called an index universal life that takes advantage where your money is not in the market, it's linked to the market, and you have that zero. Well, you have that protection where zero is your hero. So if the market goes soft, takes a nosedive, you're locked in, your gains are locked in, your principal is locked in, and you get that protection where you don't lose money. And when the market recovers, you get to participate in that growth at a ceiling. But the first line is the fixed environment. And a lot of us have our money in a fixed environment that represents your savings accounts, even CDs. Well, there are permanent life insurance policies that also allow you to grow your money in a fixed environment, and that's the whole life. And so the growth of the cash component in that policy will be at a fixed rate where you pay for the guarantee. You have that safety that no matter what, the guarantee will be there. Well, that line kind of looks flat, right? And so that's something you definitely want to consider as you're looking at your financial goals and you're talking to your life insurance agent or your financial advisor. Is this the right mix? Is this asset better for me and my family? And then the line that's in the middle, that's all over the place, that's the variable market, that variable environment. That's in the stock market, where if you're someone who enjoys risk, you can stomach the ups and downs. Well, there is a permanent policy that allows you to grow a portion of your money in the variable market, and that is a market-based variable universal life. So it's very important that you understand what type of permanent life insurance policy and contract you're entering in, and where you don't have a misguided expectation, because they are all different. And we know that each one allows us to participate in the different environments. So if you're someone that likes fixed, you're choosing that whole life, that fixed rate, where you know I'm going to get the growth of my money and this policy no matter what. If you're someone that likes risk, you're in the middle and the variable, and you definitely need to speak with someone to make sure you can stomach when the market takes a nosedive. That's a policy that allows you to participate in that variable market, and is based on the market, and you are exposed. But if you're someone who have just heard about the index because you're attending this financial lit session, you want to get further information on how you can protect and enjoy the growth without risk of loss. And that is a market index policy that we call an index universal life, and all allow your money to grow tax deferred. So, why do people choose cash value policies? Well, I've already said the cash value is part of a living benefit, and it it's available for as an income replacement, a lifestyle protection, a wealth transfer, even allows you to build a legacy, and also over time create a lifetime tax-free retirement income. And so that lifetime protection, as the cash builds up and you have that protection of the death benefit, you have that flexibility where you can respond to emergencies or even different needs. Whether you have young children and you're looking for another option to save for them for college, a permanent life insurance will allow them to do both. They could save for college in that permanent policy and also use the proceeds later on in life to create a lifetime tax-free retirement income. Because remember, the cash value life policies are permanent and they last for a lifetime, and you can have as many that are suitable for you and your goals and your family needs. So, how does it work? As you pay your premium, your insurer, the carrier, will deduct the cost of the insurance fees. And the insurance fees consist of the administration costs to make sure that they're keeping you updated. And it just depends on the type of cash value life insurance policy where you're growing your money. Remember, we looked at those different environments, the fixed, variable, or index. Well, the remainder goes to the policy cash value and it earns interest. And some policies give you the option of receiving a dividend. Now, keep in mind, dividends are not guaranteed, but you do receive the growth of your money, you receive the interest, and you can expect some returns on that investment. But it still is a life insurance policy and it has that protection in place. So as the cash value builds up tax deferred, you can access the money by either borrowing against it or withdrawing part of it or using it to cover premiums if there is a challenge or a disruption in your income. So it has that flexibility where, unlike other programs where you have to be a certain age in order to access your money or certain conditions must apply, you have the flexibility with most cash value life insurance policies. That's why this is something that you want to discuss. Sit down with a financial professional or a life insurance agent. Look over what are your financial needs and goals and make sure that you get one that aligns with those needs and goals. And at death, the beneficiary receives the death benefit minus the outstanding loans or withdrawals. So there's still something to pass on to your loved ones. Now let's look at accessing your cash value because they also can create other events. Now, the money that you have growing in your permanent policies, they grow tax free, but depends on how you access the money will adjust the value, the cash value, and the death benefit in your policy. So if you take a withdrawal, you're removing money, therefore, you're missing out on the opportunity of growing that money. And if you surrender the account, that's it. You're closed. You're closing that account. And that's why we have withdrawals and surrender value in red because you want to caution against those actions, those behaviors. Because if you close the account, you are losing the ability to continue to grow money and create that legacy for yourself and your family. And especially if you are using the account to create a lifetime tax-free retirement income. You definitely want to make sure that account remains open and that you are properly funding the account. So we do have policy loans in the blue because guess what? When is the last time have you paid taxes on a loan? Yep, that's right. We don't pay taxes on loans. So you are able to access the money from your cash value life insurance policy through policy loans. And by setting up the cash value and using it as a collateral, you're borrowing from the insurance carrier and giving them the opportunity to continue to grow the money that you have in the account. And so, with this policy loan, you don't have to worry about having bad credit because there's no credit checks involved. And you have a flexible repayment. You can decide, well, I want to take my time and repaying myself back because now that I have this in my account, I'm functioning as my own banker. Or you can say, you know what? Take it out the death benefit. Let it all be even. So when it's that time to transfer, which I explained earlier, that your loved ones will receive that death benefit minus the withdrawals and the policy loans. So when you take a policy loan, it continues to allow you to participate in the growth of your policy. But make sure you definitely understand the value of it. And some key terms you want to talk to your life insurance agent about and your financial professional is understanding how my cash value is accumulated in the savings inside of my policy if you currently have a policy. If you're looking at one, ask questions. What kind of environment? Is it a fixed environment, a variable or index? And then the surrender value. We want to make sure what situation would I surrender? Why would I even want to consider closing this opportunity account that allows me to grow and build money tax free? And I can use this money as a lifetime tax-free income for myself. And then understanding the features of how do I access my money through policy loans, and what if I need to do a partial withdrawal? Does it make sense for me in my situation? So real life uses for the cash value, remember it can supplement your retirement income. It can help you pay for college or emergencies. There is no stipulations on this. This is your account and it's set up for your needs that you take care and you properly fund the account. It can provide funds for business opportunities, but most of all, leave a legacy beyond the death benefit. And in our philosophy in OIC 10K is that insurance is for income replacement, lifestyle protection, wealth transfer, legacy building, and creating a lifetime tax-free income. So, what scenario will the fixed environment work for you? Let's look at Maria. Maria is a 40-year-old teacher, and she wanted a lifelong coverage and something safe for her savings. So, she wants that guarantee, right? So, she bought a whole life policy. In over 20 years of her cash value, it grew steadily, and she even received dividends. Dividends are not guaranteed, but they are an option. And you want to understand if your policy is set up and designed to pay out dividends from time to time. At age 60, she borrowed against the policy to help her daughter buy her first home. She kept the policy, and when Maria passed, her family still received that full death benefit minus the small loan balance. So that whole life provided that stability, and it had that guaranteed growth and a lifelong protection. So it grew in that fixed environment. That's where Maria was in what she could stomach with growing money. Well, David, let's check out David. David looked into a variable life. So what environment he's in? He's in that middle environment, right? So David can handle risk. David is 30 and he's an investment savvy engineer. He chose a variable life because he wanted to grow his cash value in the stock market, and he allocated his cash value into an aggressive sub account. So he was like, put it all on black. Let's go, spin that wheel. Over 25 years through the ups and downs, his account grew significantly. And at retirement, he withdrew his funds to help pay for his son's college and later used the policy loans to support his own retirement. So this account can work double, it can do double duty for you and your family. It's definitely something worth considering. And the lesson here is a variable life offered a high growth potential, but David had to be comfortable with market risk. And so let's look at our next scenario, our last scenario for tonight, that index universal life, because I know you guys are waiting to call your financial professional and ask about these different environments and wanting to know more about cash value life. Well, Tanya, she's 35 and she wanted more growth potential without the risk of losing money in the market. So she's very cautious. She's a conservative investor, right? So she bought an IUL. She tied it to an S&P 500 index, right? And over 15 years, her policy captured the gains when the market was up, but had a floor of zero. Remember, I said zero is your hero. So when the market dropped, by her 50s, she had built up enough cash value to supplement her retirement income through tax-free loans. So that IUL gave her protection with the upside potential and downside safety. So keep in mind, as you are reaching out to your life insurance agent, and we're certainly here to help you navigate and have a better understanding of these types of policies here at OIC 10K, you want to ask yourself, do I want lifelong protection? Is that something I'm interested in? Do I want to build savings along the way? And am I looking for a tax advantage growth? And do I want financial flexibility later on in life? If so, you definitely want to consider cash value life insurance. So here's the next steps. Review your current coverage, okay? Set up an appointment. If you can't get in touch with your agent, definitely reach out to us at OIC 10K. Identify your family's protections and savings needs, and let's create a personalized plan that balances protection and wealth building. So that has been my time. I enjoyed. I told you guys I was excited about this topic. Thank you for allowing us to share this information with our community. We're looking forward to seeing you again real soon. I'm going to turn it back over to you, business.